Alright, welcome to Tax Management. This is your final review. Feel free to print this out. We're just going to go through this really quickly. Feel free to fast forward and rewind as needed. Alright, number one, explain in your own words how businesses create tax advantages by paying attention to government incentives. So this was from the very beginning. I want you to give me something along the lines that the government will create opportunities and draw business investment in by giving tax advantages, right? And so you, as a business owner, can become much more profitable if you'll pay attention to the types of advantages the government is trying to do. That's why sometimes it's not good when you hear people who are not financially literate. They when they're trashing wealthy people, one of the things that they'll often say is, oh, well, they don't pay their fair share of taxes, they're taking advantage of the tax code and all that kind of stuff, without understanding that that's what the government wants. The government wrote the tax code to influence people who have a lot of money to put their money there, because there's all kinds of places that people could put their money. People could put their money in anything. And so if the government's going to draw that money in and get people to want to invest in the types of stuff that the government knows that it needs to run the country properly, they have to give some kind of benefit to do that. And so the only thing they can do is give you a tax break. And so that's why a lot of times wealthy people are paying less in taxes. There's two reasons. One, they can hire a tax professional to sort this stuff out, and then B, they're investing their money in places where the government says, hey, I'll give you a tax break. I need your money to do this, so if you come, I'll give you a tax break, right? Okay. So something along those lines. The idea that if you pay attention to what the government is doing, you can find lots of good business investment opportunities that are going to be tax advantaged, right? So the government will create an opportunity for you to make a little more money than you would have made somewhere else if you'll invest in the things that they need, right? All right, number two. List the two core reasons for the creation of tax advantages in the tax code. All right, so one of them I already gave you, that the government, so the idea of this question is, why would the government put these tax advantages into the tax code? Why not just make everything straight across the board, right? Why are there some areas where taxes are more favorable than in other areas? So the first reason is that that's how the government draws in investors, right? They create a tax advantage, and then people with a lot of money are interested in that because it's going to create a greater return for them because they're not paying as much in taxes. So that's one, so that the government can draw investors to specific projects, right? Then the other one is a little more self-centered and greedy, right? And that's the fact that the people writing the tax code also have a lot of money, and so they want to create opportunities for tax advantages, often in the things that they have money in. So things that wealthy people naturally invest in, real estate, housing is real estate. Real estate and a lot of times financial markets, not necessarily the stocks. You'd be surprised. A lot of times really wealthy people are only marginally invested in the stock market because it's so volatile often. And so they'll often find other things, particularly starting up new businesses. That's a big thing, business investment, as opposed to stock market investment. And so stock market a lot of times is, there's a lot of wealthy people in the stock market, but a lot of it is retirement accounts, things like that. Real focused financial investors often are not just only in the stock market. They're often much more diversified with other kind of more stable investments, things you have a little more control over, like starting the business yourself, running a corporation, those types of things. Commodities, the advantage of a commodity is, if you're selling soybeans, the prices are going to fluctuate, but you're always going to at least have the soybeans, Whereas in the stock market, a company could crash, there's all kinds of fluctuation. All right. So, anyways, so there's two reasons. One, the government draws investors to specific projects by giving them tax incentives, and then the other one is that people in government have a lot of money too, and so they will often intentionally write tax advantages into the code for their own self-benefit, right? Okay. 3, list and describe the 5 basic categories of taxes. Okay, so what I'm after here, I'll go ahead and give them to you, and you can fill them in on your own. I'll give you the 5, right? So the first one is the Social Security and Medicare tax. You can put that as one unit there. The second one is ad valorem taxes. That was all your sales tax and excise tax, that kind of stuff. Third one was the your estate or gift taxes, the death tax, that kind of thing. Inheritance taxes. The fourth one is your income tax, right? Which could be state, it could be federal, it could be capital gains. It could be short-term capital gains, long-term capital gains. So that's your income taxes. And then there's specific business taxes as well. Some taxes that only apply to individual businesses and things like that. Okay? So that's your 5 basic categories. Number 4, explain why it's important for an entrepreneur to develop a relationship with a tax specialist. So I've said this in a few of the videos, but the idea is that if you're an entrepreneur, you probably, if you're spending the time that it takes to become a tax specialist, then you're probably not spending the time it takes to be a successful entrepreneur. And so you got to manage your time well. And so one of the ways to do that is to find specialists in certain areas. Law is another one. You're not going to be able to study all the laws like a lawyer would. So it's often advantageous to connect with a lawyer, pay the fees, get their services, and not spend the time to become proficient in what they do. Same thing with an accountant. It's much better. That's one of your first hires is a bookkeeper, and one of your first specialists that you need to connect with is an accountant, right? Because they're going to be able to do this professionally, and then you can hand it over, right? You need to know the core concepts. You need to understand the basics. You need to understand the terminology, and then you can work well with an accountant, right? Okay. Number 5, list and describe the 3 foundational steps for determining your tax liability, right? Okay, so the first one was, and you'll want to elaborate these a little bit, but I'll give them to you. The first one was report your income. The second one is deduct any qualifying expenses. And the third one is then multiply the remaining amount by the appropriate tax percentage rate, right? Okay. 6, explain the difference between tax-free and tax-deferred. So tax-deferred means you will pay it down the road at some point, and it can grow without taxes, but when you withdraw it, you pay taxes on the final total. Tax-free means there was no taxes. So a tax-free thing would be if you sell your home and you've lived in it for more than I think a couple of years, then up to like $500,000 for a couple of the income off of that is tax-free, right? So it's not tax-deferred; it's just tax-free, right? So when you sell a home that you've lived in for a while, a big part of your sale is going to be tax-free, right? Okay. 7. What is unique about a Roth IRA? Well, a Roth IRA is one that, because it's, you put the money in, you've already paid taxes on the money, so you put the money in, you paid taxes on it, it's going to grow tax-free and is withdrawn tax-free, right? But there's a limit on what you can put in. You can only put in like $5,000 a year, $5,500 a year, something like that. And so you withdraw that one, and it's tax-free upon the withdrawal, right? All right, number 8, list and describe the 5 common deductions listed in class for business owners. Okay. List and describe the 5 common deductions listed in class for business owners. Alright, so let me give you a couple of these here. We talked about auto expense. We talked about startup expenses. We talked about education expenses, entertainment expenses, and charitable expenses. Okay. Number 9, list and describe the 2 ways that an owner can put their own money into the business. Alright, so that was that last video. Go in and watch that. It's essentially through loan or through investment. Number 10. List and describe the 4 ways given in class that a business can be exited. Right? So one is to sell its assets. The other is to sell its stocks. The third is to exit with a loss, right? So you're not making anything on it, you actually lost money, and so the business is dying. And then the fourth one is through an IPO. Right? Okay. In your own words, list and describe the 3 types of income discussed in class. So go back in, watch that video that we did towards the beginning on the 3 types of income. Describe those. 12. List 3 business expenses that you discovered through your research of the IRS website, right? So I kind of gave you that IRS website that I wanted you to look through. So just give me 3 things you found off of that. Okay. And then 13. Why is it important to know where to research current tax rates? It's because these things can change every year. And so, you're learning one thing, you form your business around a certain expectation, and they could change it. It's just, it's the tax code's only good for 1 year. Some things are fairly consistent, but anything's up for grabs. Every year they can, they write a new tax code for each year, and so taxes change. And so a strategy that was very profitable 1 year, a business model that's very profitable 1 year, could all of a sudden not be profitable. And so you may have to go in and make some changes. If the tax code shifts, then you may have to adapt, right? And so that's why it's important to at least be aware. That's something that you don't necessarily need a tax specialist for. You can go on there and find that yourself and at least be generally aware of what you're going to be looking at for the upcoming year in terms of taxes. Okay? Alright, so if you go through that and research those and go back in and watch your videos, you should have no problem. If you do, feel free to send us an email.